It is an exciting virtual property event today. We've changed up the studio. I like to make these things sound fancy. We're here at Ray White Collective at the head office at Ray White New Farm. And we have got so much to go through today. There's so much content. Here with our regular presenters, Christine Rudolph, Nerida Conisbee and Matt Lancashire. Thanks everybody for joining us today. What about this? Since we caught up, we've got Olympic Stadium announcement. We've got an election happening in 3 or 4 weeks on the 3rd of May. Both sides have now rolled out their budgets, and only to make it a little bit more spicy, the RBA met over the last couple of days and made their announcement regarding interest rates. So a jam-packed episode. Thanks for tuning in. You'll see it on all of the socials as well as our live version on Zoom. Nerida, let's get into the data. Talk us through it.
Let's get straight in. All right. Well, let's start with interest rates. We had a Reserve Bank meeting yesterday. It was a hold, as expected.
You predicted that?
I did predict it.
Okay.
Would have been better if I predicted a cut and it happened. But
yes.
Sadly not. So at the moment, it's highly uncertain when we will see a cut. At the moment, the markets are currently pricing in potentially another couple of cuts later this year. But this changes day to day because we've got so much global uncertainty. So Trump today will be announcing all of these tariffs. And Australia will possibly get hit. So we already know there's tariffs on aluminium and steel. Beef is a big worry. So the beef industry could be impacted. Probably doesn't impact New Farm so much, but the big challenge will be around China. So if China starts to slow, that will be a challenge for Australia. Also, if prices start to rise, that could push out the timing of any more rate cuts as well. So
what sort of prices?
Things like if US is putting tariffs on certain products, it may mean that some of the products that we buy from China become more expensive.
Okay.
But it could go either way, because it could go that because their cost of production increase, things get more expensive for us. On the other hand, if they can't sell to the US, they may sell more stuff for us. And a good example are electric cars. It's going to be very hard for China to sell electric cars to the US. They've got a lot of electric cars, so they may put a lot more to Australia and make them a lot cheaper. So it's very hard to predict, and which is why the Reserve Bank primarily kept rates on hold, because of that uncertainty.
But we're not huge traders with the States.
Not at all. So they're number 5, but China's that's our biggest concern, because that's our number one.
China's our number 1 trading partner. Okay.
Yeah.
And so there is lots of it. We hear people are watching in the news, Trump tariffs could come or couldn't come. Is the aluminium and the steel one, is that now confirmed, or that's still up in the air?
He's confirming everything today. Okay. So that's his big announcement. He does have a day, Freedom Day or something. He's called it something, but that's his big announcement.
Well, it could be Trump.
It's not freedom, it's something else.
It's a pretty important day today. What's the date today, Matt?
A day after April Fool's Day, Haesley.
The 2nd of April, Matt's birthday. Happy birthday, Matty.
Thanks, mate.
And so that's the day. If you're watching this later after this recording, that it's the 2nd of April is the day that we're talking about, where Trump's going to come out and announce what these tariffs are. We did say at the beginning of the year, we thought there might be 4 interest rate cuts. It's now narrowed. It's pulled back to 3.
3, yes.
Okay, and we think they might come in the back end of the year.
Yes, at this point. But again, things can change very, very quickly. So, I think it is a very unpredictable market at the moment.
On that though, the banks have passed a lot of these, the first cut, right?
Yes.
So
there's a lot of pressure for them to pass the cuts on really, really quickly. And you'll probably notice too that a lot of the fixed loans, not that anyone's taking fixed loans at the moment, but a lot of those have also been cut quite significantly.
And a lot of I've been speaking to a lot of clients at the moment around their sub 1.99% loans, all expiring in the next few months.
Yeah, that'd be the last of them.
The last
of the lucky ones. 1.99%.
Going from that to 6%.
Yeah, it's tough.
Well, they've had a pretty good run.
They have had a pretty good run. All right, so price growth slowed down end of last year. Picked up though very, very quickly since January. So it looks like people were pretty much expecting the rate cut to come in Feb. They got back into the market. So you can see there, looking at Brisbane, we're now at a $1.02 million median. It is getting very expensive here in Brisbane. And then when you have a look at the top growth areas, they're all around this part of Brisbane.
Yeah,
Nerida, in terms of Brisbane performing against the rest of Australia, are we still outperforming the Sydney and Melbourne markets in terms of growth?
Yeah, easily. So there's three really strong markets. There's Southeast Queensland, Adelaide, and Perth, and those markets are still, they've slowed from last year a little bit. The rate of growth has slowed, but they're still increasing very, very quickly. So different drivers. WA is all about mining. Adelaide's kind of mining as well, but here it's people. Just people want to be here. We're still seeing high levels of migration. Even if we cut international migration, it won't really slow things down significantly here because we've got so much interstate migration moving.
And Adelaide's seeing a lot of that too, though,
Yeah.
right? Yeah.
I mean, it's Adelaide, so you've got to like
Yeah.
temper it with the fact.
Yeah.
I mean, yeah, the number of people would be a fraction of who are coming here, but it's
Yeah.
also population
Yeah.
growth.
And we did feel that, right? So at the front line at open houses across Brisbane, across the southeast corner, we did feel a slowdown in the last quarter. So second quarter of this financial year, or October to December for the rest of us that live in the calendar world, we saw a slowdown, right, at
Yeah,
open house.
definitely.
Absolutely, yeah. I think after we had that bump that happened when we had that first rate decrease last year, and then just before Christmas, when there was not a further one, I think definitely numbers did slow, but back up again now with the rates being cut again.
Real surge, Matty.
Surge of buyer inquiry, surge of numbers through open homes, but a decrease in stock levels, new stock to markets down by 13%.
Yeah, it's going to be funny. We're going to talk about this today. When you think about a market and what affects a market, in that quarter, we had to deal with a cyclone or ex-cyclone in whichever part of the state you were. That caused a bit of a pause, which meant if you were going to list your house, if you think practically, if you're going to list your house in that 10-day period, probably going to delay. Well, that was a third of the month. So the buy demand didn't stop. The buy demand kept coming. So we've now got more of a pent-up demand. So we saw open numbers really pick up in the first quarter as opposed to October to December. That's creating a bit of pressure with pricing, and we're bullish. I think the big thing since COVID is seasonal trends seem to have vanished, and it really is just all supply demand. Supply demand. I reckon winter was considerably better than spring last year because of supply demand. Yeah. All right, let's keep dancing.
Let's keep going. All right, construction costs emerging still as a challenge. Not emerging, they're still a problem. So we did see that huge spike during the pandemic. Brisbane saw the biggest increase nationally. So they jumped 30%. It's come down, but that's a rate of growth coming down. So they're still growing. And I think what's worrying from that chart is that it's actually picking up again. So there is a lot of pressure on the construction industry here in Queensland. You've got the Olympics, you've got commercial building taking place, you've got cleanup from natural disasters, a lot of people moving here. You don't have enough trades. You need more trades, but you need homes for them to live in. So there's this circular problem as well. So
this is the big hot button.
This is the big
I can feel the energy from everyone here. Like, I want to jump on this. You shoot first.
I just think, I don't know if you remember the old days of building a house for 2,500 a square metre. Gone.
And that was luxury. That was in the last period of time, 2,500 in the last couple of decades was high level. I mean, you're right. I can see the look in your face. It was for the old people, but that was a bargain basement. Is probably what I'm saying.
I think if you thought you could build a house even now, and like there's different types of construction. There's obviously the entry level construction, which is sitting anywhere between 3,500 to 4,500 a metre entry level now, and that's the labour costs. So labour is very expensive at the moment. But if you want to build an architectural home now, they're creeping into the 10,000 a metre now, which is catching up with Sydney. So Sydney was at 10 to 12,000 a metre, and you're getting the same amount of concrete, probably less because it's smaller, and you're building bigger houses here. And a lot of architects that I've spoken to are now pitching to their clients that it's going to be anywhere between 8 and 11,000 a metre.
So to give you a lens on that, at COVID, at the COVID intersection, luxury was 4,000 to 4,500 a metre. So we're talking about more than double in a 5-year period. Sorry, go on.
And I was going to say, and this is definitely creating the demand for newly completed homes or architectural homes that are being resold. They're still continuing to get premium prices in the luxury market now.
Well, they've actually caught up. The prices have kept up in the top end for good quality luxury builds, have kept up with the construction increases. So the prices have gone because the demand's so strong and there's not a lot of properties for sale, back to the supply and demand.
So let's pause. Let's not jump on the big O word just yet, but we know we're going to be talking about it. Let's just talk about what's SOCAP. So construction costs are already high. Every time there's a natural disaster, insurance companies rely on tradespeople to fix them. Well, whether it was Cyclone Alfred was as big or as bad as we thought, it certainly did have an impact. There's been other natural weather events that have taken place. We're already getting squeezed. We're building bridges, casinos, hospitals have been taking place. So it's already super tight. Let's involve our sporting event and some big announcements there. It's going to be hard to get a well-priced construction job. And it's probably going to lead to what's happening on your next slide.
Yeah, so we've got other problems, which are a lot of insolvencies. So a lot of construction companies are heading into receivership. So it's been going for quite some time. You can see there it's actually the biggest problem sector at the moment with receivership. So a lot of construction companies going under. And a lot of it has to do with the fact that a lot of them were running on very, very tight margins during the pandemic. So you can imagine if you've promised to build a home for 500,000 and then your costs increased by 30%. A lot of them became unstuck there, that they just didn't have enough wriggle room in terms of that margin.
There's a big builder in Brisbane, or they're in Australia wide, but they had over $13 billion worth of projects that they completed with a $3 million profit.
Wow, just share the numbers. I mean, guesstimates I get,
over 13 billion of deliverable products and $3 million profit.
Wow.
So converting that into percentage, that's a very low percentage margin.
It is scarily low.
Yeah. I mean, I'll cross to our economist to do the arithmetic.
Extremely low.
Slow, and that's a big thing. Like if you have a look at this slide, I mean, construction is the highest in the insolvency in the insolvency sector is construction, and practically you think about it. I need to budget for my house. I need to get a loan for my house. You're trying to get locked in contracts, which everyone used to do, and then you can't build them for that. Well, the money's got to come from somewhere. So the builder's been copying it a bit. Now most of them, Matt, I think you've reported that a lot of the builders you're talking to, they're doing cost plus.
Only.
Yeah.
No fixed price. It's just
very hard to budget.
Well, a lot of
individual.
people are getting quantity surveyors in now as well, rather than just relying on the builder to price it. And then obviously they're keeping their margin is sitting on the top line. So builder's margin, costs and everything, and then everything else just is cost plus on top.
Yeah.
Although when you drive around the streets of the luxury suburbs in Brisbane, there are huge renovations taking place. So despite the costs, the confidence is still there. And I imagine that that's been from the built-in increase in capital growth that a lot of people have seen.
You can't overcapitalise. It's very hard to overcapitalise.
Because what are your alternatives? If you want luxury in Brisbane, you don't want to be the one building it. And these people, aren't they doing extraordinary jobs? Like the difference in the build now compared to what the build was a decade ago, the level is so much higher. And you're right. I mean, to those builders that are out there in the market that are doing it and the people are happy to pay for them, they've taken the risk and the risk is paying off because there is an active market there for them. All right, we've got one last one.
Another problem, labour productivity. So this is around how quickly it is to build, and cheaply and easily it is to build a home. So I guess the easiest way to talk about this is if you're with supply chain blockages, they're not such a problem now, but if your bath doesn't arrive, you can't finish your home. So that slows down production. If you can't get your tilers to come in to tile the bathroom, that slows things down. So productivity is really low. And then we've also got this time to complete a home is really blown out. So it's just taking a very long time to build things because of that productivity issue. So if you have a look at prior to the pandemic, it took around 6.5 months on average to build a home. It's now taking well over 10 months. And I think you were saying around luxury is even taking longer.
Oh, there's a lot of builds that are taking over 2 years. Yeah. Absolutely.
Well, we'll get one last construction challenge.
No,
you're done. Okay, you're good. All right. Well, let's start to look at what we're going to do to fix it. You're going to do the length of time. Yeah, no. Let's start to talk about what we're going to do about to fix it. And so this
the budget.
Next part here, is regarding the budget. We've seen the current government's budget. We've seen the opposition budget. So we're the 3rd of, what are we today? 2nd of April today, and we're a month away, birthday boy, we're a month away from the federal election, the 3rd of May, right? The May Day long weekend here in Queensland. All right, so what are we hearing from the parties?
I guess housing's not a big focus. It's a lot around cost of living, it's around tax cuts, it's around fuel prices. So I think they're seeing that as a big issue. When we have a look at how the coalition are looking at housing, they're very keen to focus on infrastructure. So they're saying we're going to put, I think, $5 billion. We're going to make sure there's enough infrastructure in new areas to cope with the new growth. Both parties want to train tradespeople. So that's a good news.
That's
Both
great.
of them have a lot of negativity towards foreign investment on established homes, which is not an issue at all in Australia because it hardly ever happens. So, but I think that's just for other reasons. And then you've got what was announced in the budget. So the federal government does have a push to build 1.2 million homes over the next 5 years. We're off to a very bad start. Some of the things that they're looking at are this Help to Buy scheme. So this is basically, if you're a first home buyer, you can go in and buy, I'll say $1 million because it's easy to calculate. If you were going to buy a $1 million home, you would own 60% of that. The government would own 40%. So you'd only need to have the borrowing capacity to pay for 600,000.
Is this both parties are suggesting this, or just the current government?
Just the current government.
Okay. So just to wrap that up, in sort of layperson terms, like Haesley terms, they're partnering with you. So
Totally.
they're your partner.
They're your partner.
So
yeah,
if-
it's like, yeah,
If I'm the government and you're buying it,
yeah,
I'm in for 40%.
yes.
So you go to sell it. The theme is I don't just get my money back. I'm not a lender. I get 40% of the total value.
Yes.
If it
that's
goes
correct.
down, I get less. If it goes up, I get more. There is going to be a lot of devil in the detail.
There's a lot of devil.
Yeah.
I mean, there's even things around the issue of owning a property with the government. Like if you want to renovate, for example, you'll need to get approval. If you've got a tenant in your property and you're earning an income, that might be an issue. And then there's also what happens if it drops in value.
Yeah.
So that could be
Just
a
share that.
challenge.
Yeah.
Yeah.
Pete, Albo, or whoever's in.
do you think
What do
Albo's-
you think? The white tiles, the blue tiles? What are we going to do with the reno?
Photos.
What should we do?
yeah.
I can't figure out the door
I wonder
handles.
if Albo used that for his beach house. As well.
Oh, there it is. So okay, this is good. This is something that they're bringing in.
I
Now,
mean, it will be popular because you can imagine if you are a first home buyer getting into the market, you can buy a much better home. So we think it'll be popular, but I think that it'll be the exit that is the most challenging.
we're not the first to do it. Let's
No.
have a look at who else has done it.
So it has been done elsewhere, and it's quite mixed in terms of the success of the scheme. So close to home, New Zealand has much worse affordability problems than us. They've done the scheme. People came unstuck because what happened in New Zealand, property prices fell very quickly. So if you went in and bought $1 million home with the government and suddenly it's worth 700,000, that becomes quite a different situation
Who
to
shares
what
the
we're
loss?
used to. Yeah. So that was quite problematic. UK, they only do it on new homes. It has tended to skew to help more wealthier people. So I think that's a bit of a criticism that if you're already able to buy a home, like it doesn't help lower income people, but that's a problem. And then the Canada as well has also had the scheme, but we've written up quite a bit of detail as to how they've done it. But it is the devil is in the detail, exactly what you said, Haesley. It is, and we don't have the detail as yet, so we don't quite know.
I mean, the good thing is, I suppose, for people wanting to understand it, it's been rolled out around the world before.
Yes.
I've had friends selling property in London, in the UK, and the buyers did love it. You know, the buyers, it really did help them. As a real estate enthusiast, I mean, we've kicked this around in conversation. Buying your first home is the hardest one to buy. You've got to climb the mountain, you've got to save the whole deposit, you get no benefit of any capital growth. But once you get in, as soon as you start to get the gift of capital growth, with the big asterisks of when it's there, obviously it wasn't there for the Kiwis, but then you get that chunk of money. You know, if you saved hard to get your 10% deposit, you save 100 grand, took you a decade, place is worth $1 million, then it's worth 1.2. You get 200,000 back. You know, like that's a big gift. Now, if you do this with the government, or some, you're only getting 60% of the 200. So you just got to accept the gift you're going to get. That it's not as high to climb. It's a lower level mountain, but it's not as much capital growth. And you've got to be able to deal with that, I suppose.
And then also on affordability, that we know if you don't build enough homes and there's more people piling into that price point, it pushes up value. So I think that's, again, fundamentally, it doesn't really help with affordability. Prefab is another one. So
about this, Hayes?
I have done some prefab.
We've got a personal story on prefab.
I've burnt my fingers on prefab and modular before in the post-GFC market. Lots of greenfield sites. They weren't wanting to develop them. Cost of construction was there. So as a real estate agent, I started to look at that. We did set up prefab factory in Thailand, overseas, because we thought we could build them there cheaper, bring them out here. But we're a lot more compliant in Australia for what we expect. So when they came out, we had to retrofit to get it to Australian standards. And the cost to do that was quite high. So if you speak to Australian prefab companies, they can do it cheaper. It is off-site. It is less labour, which is probably, to your point, Matt, taking up a lot of the cost. But it's like buying when you think something's cheap, it's never quite as cheap as you think it's going to be. So there's still going to be a fair bit of cost. How much are they investing?
Not very much. So 54 mil. So it's not going to make a huge difference.
54 mil.
Oh, how many houses are they going to build for that?
Yeah,
54 maybe.
Yeah.
54.
It is actually interesting. I've just sold a property for a client who's bought acreage up near Sanford, and she actually has been able to get a prefabricated modular home done to almost architectural standard that she's going to put on the property, and the whole process, I believe, is only going to take 3 months. So there are buyers at the moment seeing this as a cost-effective way of getting a house quickly, and the construction costs were considerably lower.
And they are a bit edgy too, don't they? Look cool.
Yeah,
when you
they
get
can
them
be
right.
cool. I think too that
Maybe I'll go and do it again.
Is your house prefab?
prefab can also mean components. So I think one of the ones that's commonly done now is prefab frames. So they can build them off-site, bring them in, as opposed to the waste and the labour required to build them on-site. So I think that that's probably the other issue. It doesn't have to be 100%.
The
prefab.
speed of modular and prefab done in the way people want it done, very exciting, very cool. But again, 54 million, not a heap of investment to it, but maybe that's because it's a bit of a big bet.
Yeah.
You've still got to get the trades to be able to put them together too.
Yeah.
Yeah. Although some parts of it become more manufacturing.
Yeah, it becomes a lot more easier internal at the factory.
Yeah.
All right. And speaking of more money, more trades.
Money, definitely good news, more money to trades. We know that there's 2 ways to get more tradespeople. You either import them, labour, or you train people. So this is very good news.
I think for mums
and both sides of government are
do you
doing
think
it.
for mums and dads around the country, I know with 3 little kids, there's a sigh of relief that says, well, this is great. This is government investment. This jobs is going to be available. Like we've got another decade worth of heaps of jobs. So I like that as a parent.
And
I like it as a thing,
AI can't do a tradesperson's job. So
that's right. And we know you're listening.
I think future-proofing, it's not a bad idea. And then this one around foreign investments. We don't really have hardly any foreign investment in existing properties. It's been policy for a very long time. So I don't know. I think this is just.
Is this a bit gimmicky?
It is gimmicky, but both sides of government are doing it. So it's and actually we don't really have much foreign investment in Australian housing, full stop. So not even in new properties anymore. So anyway,
it was it's a pretty easy kick and it grabs a headline. So we're going to stop foreigners coming in here and taking your properties. They're not taking them anyway, largely. Okay, that's the actual facts from the front line. Their interest is in brand new.
They're not even interested in that now.
Okay, wow.
They have in the past. So if you think back to end of last decade when there was record building in Australia, a lot of that was because we had a lot of money from China coming in and buying existing properties. So that money's gone. So they're not interested anymore in Australia.
So it's a good headline, but a bit of a non-event. All right.
And then Olympics.
Oh, I'm on to the Olympics, the big O word. All right, well, we're pretty excited. I've got a little column in the paper and I open it this week by saying, if you were playing a drinking game at one of my auctions over the last 5 years whereby you took a shot every time I said Olympics, you'd be legless. And it's only going to get worse because they've announced the stadiums and I'm even more excited. Like I think the data, now I don't know where I heard this and you can probably fact check it, but I did hear someone say, very anecdotally, 3% of the world's population, if you said point to Brisbane on a map, would get it right. 97% of the population wouldn't get it right. Post-Olympics, it'll move closer to 30%. What do you think? Sound like
that's about right.
Yeah, I think that is true.
That's legit.
Because, I've
Brisbane on
travelled overseas and said I'm from Brisbane, people say, oh, where's that? Said, have you ever heard of the Gold Coast? Oh, yeah, the Gold Coast. So the Gold Coast is much better known than Brisbane.
If I met someone from Canada and they weren't from Vancouver or Montreal, I go, I'm sorry, I don't know anywhere else. And they go, Calgary? I go, oh, yeah, I know where Calgary is because you guys had the Winter Olympics. Right? And it just is a big marketing push.
Branding.
Yeah,
branding.
it really is. And I love the stadiums. I mean, I know that everyone has different opinions on them, and you're going to build a stadium, you are going to lose some green space. And I get that some people are emotionally attached to that. But in terms of just the real estate aspect, these ones that you can see up here, so they're looking to put the main Olympic Stadium at where Victoria Park Golf Course is at the moment. I'm a local resident. We've owned a local real estate business for 20 years. I've played golf there once and I've never walked around the park. I did get married there in one of the venues, but I don't really think that takes advantage of the green space. So I just want to give some insight into how many locals are really engaging with that space all of the time. This is going to be a big stadium. Hurston, Kelvin Grove sit just here on the shoulder of Brisbane City. They've got a hospital, university, high school, Ballymore.
Very central to all of our major infrastructure.
And when you're traveling, you walk a bit further. I know if we had to go down the street to get a coffee, we'd drive. But if we were in another capital city, we're happy to walk a lot further. You know, if I'm in Melbourne, I'm going to walk to the MCG. That's about the same distance. And a lot of walking traffic is going to take place. Gregory Terrace is going to house the swimming. It's going to be amazing for Spring Hill. I know you're going to talk about these areas. The Ekka grounds, we abbreviate everything in Queensland. If you're watching from interstate, that's the exhibition grounds. That's going to be where the Olympic Village is going to take place. So pretty excited about that. A lot of talk that the Gabba was going to get a big makeover. Bit of pushback. Well, a bit of cost wasn't going to work. So they are going to do, did you know they're going to do cricket?
AFL.
AFL is going to be there. And then after the games, they're going to change it into a bit of an urban hub. I think Christine will talk to that, and a big transport hub.
Did
there.
they mention how they're going to repurpose Athletes Village after?
I think it will convert like other ones into more residential accommodation.
Yeah.
That's right.
Housing.
That's what it's predicted to be.
So here they are here. That's that big stadium's going to be the Olympic Village. 65,000, I think, is the number. 63,000. But then when they do big concert events, it's going to get even bigger because people will go and stand on the field, and so that can push up to about 80,000. So it'll be a big stadium. This is where the swimming's going to take place. It's Centenary Swimming Pool up on Gregory Terrace. It's going to be amazing for that region. And then this is the transport hub at Wollongabba, and this is all through the Ekka ground. So that's the big greenfield open space at the moment where they do the hot laps in the Holdens and the Fords at the Ekka in August, and the fireworks take place. Sideshow Alley's over here. And so all of this, Christine will touch on, is going to come alive. This is what we've already probably touched on a fair bit in terms of the construction costs that are going to come in, and it's just going to soak up a lot of the tradespeople. Christine, you may want to take us through a bit of detail on those suburbs.
Yeah, so we're already seeing a lot of buyer inquiry at the moment from people quite excited about the announcement in the last week because it's given certainty. And, a lot of investors are actually contacting us and they're saying, well, where should we be putting our money right now? So there's some real benefits to getting in right now, as well as the benefits that are going to be happening afterwards. So these two key suburbs, Hurston and Kelvin Grove, they're very undervalued suburbs at the moment, but they're going to really benefit from the infrastructure that happens. So they're very, very close to Victoria Park and the showgrounds. And pre-Olympic Games, you're going to see a lot of those apartments and areas in there soaked up by a lot of workers who are going to be wanting to be close to go to work. There's currently low vacancy rates of 1.2%. And looking at the projections, there could be a growth of up to 20% annually, which we've actually seen in some suburbs for units in the past 12 months.
Yeah, big time.
And then also these particular suburbs post-2032, with all of the legacy infrastructure that's going to be put there, they'll really benefit from that because people are going to be able to get close to the city. And we've done a little bit of projection on how this affected Sydney post-2000 games, and those suburbs actually did see a 66% growth in value. So these
the ones that were right in that region.
Ones
It's
right
on
in
the
region.
Western Corridor.
Yeah, that was around that Homebush precinct would have seen it, right?
And the way through.
That's right. So the next ones that we see benefiting as well are definitely Spring Hill and Bowen Hills. And Hazy, I know you were touching on this earlier, saying that you're going to dedicate your column to these two particular suburbs at the weekend. And one of the things that you've said is that they're real suburbs lacking a high street at the moment, but this is going to give these suburbs a high street.
If you were in there, like we sell all through this area, so we know it well. We've looked at Hurston, Kelvin Grove, Bowen Hills, and Spring Hill for years and said these areas need to be activated. If they were just activated, their prices would roar. All their neighbouring suburbs, Paddington, New Farm, Wilston to the north, Ascot, they're all around them. They're much higher prices. So Bowen Hills, Spring Hill, Kelvin Grove and Hurston, they're going to be activated. They're going to get a big stadium. They're going to get a big high street. They're going to get a lot of like a good vibe. And when they get that, I think you're going to see those markets really roar.
Absolutely. And, you know, in the past 12 months, our office has actually achieved some record prices already in Bowen Hills and Spring Hill. You know, we've seen one-bedroom units sell in the 800s already for Spring Hill, which is quite extraordinary. So they're suburbs to get into now. Now, there has been a lot of speculation from people who were worried about the Olympic Village going to the North Shore area of Hamilton. And, you know, just in the past week, I've actually seen a lot of relief from buyers that the Olympic Village will not actually be going to that North Shore Hamilton area. And the reason being is that traditionally a lot of the Olympic Village is then converted into more sort of affordable housing. And you've already got in that stretch there a lot of investment that's been done by Brookfield Multiplex and also Fraser's Property Group. They've put in billions of dollars into that area, into infrastructure and also luxury apartments. So this is now going to be an area that's going to really be worth watching for luxury waterfront development. There's a plan called Project 2050 that's just been announced, and that's also going to really beautify that area as a big growth corridor. And when you think about 25 years, I was speaking with a client the other day, 25 years ago, when you look down at that area, I'd actually just moved up from Sydney at the time, and the only apartment development that you did have down there was Brett's Wharf.
Yeah.
But now, when you have a look 25 years later, 25 years does not take a long time to see a transformation. So we're going to see that whole precinct there really have some beautiful, stable growth, and we're heading towards, that'll be a great place, particularly for downsizers.
Such a great point. You remember that Brett's Wharf, which was really just one little function centre all the way through to Royal Queensland. There was not what is there now. Now you've got Eat Street, Portside, Bluey World, like so many good things, plus that North Shore development. We're going to talk a little bit about the first home buyer incentives. I don't know, you touched a little bit on this, Nerida, Christine, I'm not sure, but if you have a look at them up there on the screen, there is a lot in play for first home buyers at the moment, really showing government's confidence for first home buyers to jump into the market. We did touch a little bit on that earlier. Matty, on this play with regard to the prestige market, anything you want to jump into today?
Yeah, absolutely. So what I've been seeing lately is the supply and demand. So properties, if you're talking prestige, the prestige in Brisbane, remember it was 2 million. Then it turned into 3 million, then 4, and I believe that prestige is pretty much 4 and 5 plus. There have been more transactions in the 5 million plus range in the last 3 months than what there has been almost in the last 2 years before. If you look at some of the hotspots for prestige sales, Ascot, Hamilton, Clayfield have been the hotspots, and I think my prediction on Olympics, where are really good hotspots for people to look at, will be that Hamilton Hill and Ascot area. You're close enough to the action, yet far enough away. You've got all the Crosby Road stuff that's going to be going on down at through Albion area.
Yep, Water Oval, through to the dog track,
through the dog track and everywhere. And then obviously really good access to, you know, the new Victoria Park and everything. I talk with a lot of buyers agents at the moment, and they do not have enough stock to be able to sell their purchases. We've been dealing with a number of buyers, probably seen the most amount of 10 million plus buyers in the market than I've seen in a very long time. And a sale has just transacted over $15 million in that area which will come out relatively soon. And there were multiple buyers, 3 buyers, all on the same property.
Yeah, one of the things you've said in the last couple of weeks is you've had more inquiry for buyers above 10 million in Brisbane than you've probably seen in a couple of years.
And not enough homes to show them.
Yeah. It's interesting that you say that because I'm going to show you some data here. This shows that year on year, quarter on quarter, so January through to March, we are down year on year of the number of buyers we met at open for inspections. Don't worry, we still met a few. We met just under 8,000 in that time at an average of about 5 per open for inspection, so 4.8. So we met 7,918 versus 8,824 last year. That would be worrying, except we saw stock drop off. And because we saw stock drop off, so number of available properties, the average number last year was about the same. I think it was 4.9 versus 4.8 in the average number of attendee. You can see on the 5-year trend line, we've been tracking this now since we started these updates back in 2021. It's still sitting really high. So that was at the high COVID peak, 2021, 7,671 people. And that was tight stock environment as well. Unconditional sales, still sort of a line ball. We saw that dip in 2023, which hurt a bit. But yeah, last January was really, really strong. And I think this quarter, you take 1/3 of March out, well, it's coming somewhere and it's going to come in April. I really think April, which sometimes can disappoint because of the public holidays, I think it's going to pleasantly surprise the market. I'll give you a quick insight into the rentals as well. Available properties that sat there, we saw 129. We really believe that high octane market, the rental market, it has really pulled back over the last 6 months. The price point of 0 to 500 is super hot. There's just nothing left in that price range. 500 to 1,000, it's still reasonably strong, but we are not seeing what we were seeing a couple of years ago with headlines of housing crisis. I wouldn't say we're in that current
Are we
space.
still seeing the price increases, or that stabilised
No,
out
it's
of it?
really stabilised. Look, property specific, but it really has stabilised a lot. I mean, a lot of people wanting to get into the market, a lot of people buying. That's the buyers coming in, they're transacting there. Most people are renewing their leases to avoid going out into the market, and they're renewing for comfort. Those headlines last in your mind a long time. You think it's still like that, so you don't want to step out into the rental market, so you renew, stay in your lease, and everyone sort of found their seat on the bus a little while ago. That's our time. I mean, we have roared through a lot of information. We do have a couple of people in the studio audience with us today. It's customary to ask if there's any questions. If not, for those of you that have been watching along, if you want a copy of the slides, all the details on how you can do that are going to be at the base of the Instagram or within the Zoom link. We're going to email it out to everybody as well. Any questions from our crowd today? Any final comments from any of our panelists? Christine, anything you want to finish up with? Nerida, Matt?
You're done.
We did well to keep it PG today, I think.
I think we did very well until that comment. We'll fix that in editing. Thanks very much for staying with us here today. On behalf of Christine Rudolph, Nerida Conisbee, the birthday boy, Matt Lancashire, I'm Haesley Cush, and everyone at Ray White Collective. Thanks for tuning in, and we'll see you next time.